Welcome to the Deep Dive. Today we're digging into Japan Tobacco Inc.'s Q2 2025 earnings. We've gone through all the key materials to give you the essential insights, the full picture without you having to wade through everything. And honestly, the market reaction was pretty telling. The stock jumped. So this deep dive is really for you, the investor, trying to figure out what's really driving JT right now. What are those aha moments?
Exactly. And what's interesting here isn't just the numbers themselves, but how JT is really making some clear strategic moves in a pretty complicated global market. We'll connect the dots on their performance, the strategy shifts, and especially, how they're setting up for what's next.
Okay, let's jump right in then. Headlines first. JT had a really solid second quarter.
Yeah, robust is the word. Revenue hit $907.6 billion. That's up 9.4% year over year.
Pretty good. But the adjusted operating profit, the AOP, that's their main metric, right? That really stood out.
It absolutely did. AOP jumped 20.7% to $273.3 billion. That's a significant move.
And I saw if you take out the currency swings.
Right. If you look at it on a constant FX basis, it's even stronger. Core revenue up 15.0%. And the AOP up a massive 28.7%. That really shows the underlying business is performing extremely well.
Wow.
And they also announced a pretty significant dividend increase. Guidance is up to $208 per share for the year.
With an interim of 0.04.
Exactly. That's a clear sign of confidence, no doubt about it. The market's certainly like that.
Okay, so let's unpack that a bit. Those are impressive numbers for Q2. What was behind such a strong first half overall for FY25?
Well, it's definitely a few things working together. For the whole first half, so January to June, revenue was $1,734.5 billion. That's up 10.5%. And AOP hit $539.9 billion, a 19.2% increase.
What were the main drivers?
A huge factor was pricing power. They showed real strength there in several key combustible markets. Think Philippines, Russia, the UK. And it wasn't just small tweaks. This pricing strategy was strong enough to, offset the impact where some consumers might have been trading down to cheaper options.
Right, that down trading effect.
Yeah.
So pricing was key. What else really moved the needle?
The other big piece was the Vector Group acquisition, those U.S. combustibles assets they bought last year.
Yeah, I remember that. How's that playing out?
Very positively. It boosted volume, obviously, but also crucially improved the market mix because those assets generally have higher margins. It was a big help, especially for the EMA cluster, Europe, Middle East, Africa. And management specifically said Vector's contribution is right on track with what they expected, so delivering as planned.
Okay, and what about currency? The yen's been a factor.
It has. The yen's strength was still a headwind, an FX headwind, but their revised forecasts suggest that negative impact should lessen going forward. So some relief potentially on the horizon there.
Got it. Now, JT isn't just tobacco. What about the other parts of the business? Processed food, pharma, how do they do?
Right. So the processed food side saw revenue tick up by $2.9 billion, mostly from price changes, and interestingly, higher sales of packaged cooked rice. But the profit, the AOP there, actually went down, mainly because raw material costs, especially rice, went up.
Okay, so a mixed bag for food and pharma.
Pharma saw revenue increase by $4.3 billion. That came from better sales in things like skin disease and allergen treatments, plus higher overseas royalty income. AOP in pharma was broadly stable.
But isn't there a big change coming for the pharma business?
Yes, exactly.
Yeah.
And this is important context. JT is transferring the whole pharmaceutical business to Shionogi. Starting next quarter, Q3, it'll be treated as a discontinued operation.
So that really streamlines things for investors, right?
Absolutely. It makes the investment story much clearer. It's all about focusing resources on the core tobacco and the reduced risk products, or RRPs.
Speaking of RRPs, there's been a lot of noise, positive noise, around Ploom AURA. That seems like a really big deal for them. What's the latest on their HTS momentum?
Yeah, this is where things get really interesting strategically. RRP volume overall surged 20.2% year over year in Q2. That's huge growth. And heated tobacco systems, HTS specifically, that volume jumped 31.2%.
Wow. And Ploom AURA is driving that.
It seems to be a major catalyst. It launched in Japan late May, and the start has been exceptionally strong. Get this. In the first 3 weeks after it went nationwide, cumulative device sales for AURA were about 3 times higher than the previous Ploom X model saw in the same time frame.
3 times. Okay, that's significant.
Definitely. And it helped pull JT's overall HTS share in Japan up to 13.6% in Q2. They saw even faster growth after the AURA and the new EVO sticks launched together in July. It suggests they're really gaining traction, maybe even taking share.
So the device itself is hitting the mark. What are people actually saying about it, the users?
Feedback's been really positive, overwhelmingly so. People are talking about a stronger kick, a rich and satisfying taste. They also like the design slimmer, more comfortable to hold.
And the new sticks,
Yeah.
the EVO ones.
High marks there too. Rich and delicious is the kind of feedback they're getting, even with a slightly higher price point.
So what's the plan now for AURA? Japan's success is great, but
Global rollout. They're planning to expand the stick options first, but the big move is taking AURA overseas. Switzerland is up first, starting in September, and they reiterated they're still on track for those big 2028 goals, making RRPs profitable and hitting a mid-teens market share for HTS. The AURA launch certainly adds credibility to that ambition.
okay, so strong first half, great momentum with AUR.
Yeah.
How did all this translate into their full year guidance? Did they raise it?
They did, raised it pretty much across the board for FY25. Revenue forecast is now $3,344.0 billion. That's up 2.2% from what they initially thought. AOP guidance got a bigger bump, now expected at $824.0 billion, which is a 12.1% increase from the first forecast.
Okay, so higher revenue, significantly higher operating profit. What about the bottom line and cash flow?
Yep. Operating profit and overall profit forecasts were also revised upwards, consistent strength showing through. The only number they revised down was free cash flow XCF, down to $236.0 billion.
Lower cash flow. Is that a red flag?
Management addressed that directly. They called it transparent housekeeping.
Hmm.
Apparently, it's mainly due to timing things, like initial payments for those Canadian litigation settlements, plus holding more inventory of non-tobacco materials, which ties up working capital. They were clear it's not a signal of lower demand or core business weakness.
Got it. And that dividend increase we touched on earlier, 194 to 208 per share. Let's just circle back on the significance of that.
Right. That increase brings the payout right in line with their stated policy of 75% payout ratio, give or take 5%. What's notable is doing it now alongside Q2 results. They haven't typically done that.
So it really underscores the confidence.
Exactly. Confidence in the upgraded forecasts, confidence that the FX headwinds are maybe easing a bit. It's a strong message to shareholders about sustainable performance.
It definitely sounds like a fantastic first half, but, are there any clouds on the horizon?
Potential headwinds for the second half of the year investors should keep in mind.
Yeah, it's always good to look ahead. They're expecting growth to moderate somewhat in the second half. A big reason is simply comparisons. They'll be lapping the Vector Group acquisition from Q4 last year.
Ah, right. So the year-over-year growth percentage will naturally look smaller because last year's base was stronger from Q4 onwards.
Precisely. Also, they plan to invest more heavily in rolling out Ploom AURA globally so that spending will ramp up. And market dynamics. Industry volumes in places like Turkey and Russia were really strong in the first half. They expect that to slow down a bit, partly due to pricing actions and tax hikes.
Okay. Any other potential issues?
Well, launching new products in places like Bangladesh means tougher year-over-year comparisons there, too. And they did mention potential uncertainty around U.S. tariffs, imports, exports could impact costs or consumer mood. But they said, so far, no significant impact has actually materialized. The running scenarios, though, just in case. Understood. So the market reaction was pretty clear. Stock up over 6% the next day, lots of trading volume. What's the big takeaway for investors from that? What message is the market sending?
Well, it strongly suggests investors really liked what they heard. They're buying into the higher guidance, the bigger dividend, and I think crucially, the real progress they're seeing with HTS products, especially Ploom AURA.
And the pharma divestiture plays into that.
Absolutely. Getting rid of the pharma business makes JT a much clearer story. It sharpens the focus right onto the core tobacco and the RRP growth engine. It simplifies the investment case, makes the value proposition perhaps easier for the market to grasp. JT is basically saying, we're focusing, we're strong in our core, and look, our next gen stuff is working.
So streamlined focus, solid combustibles performance, and a potential RRP winner with AURA. What about shareholder returns overall? How do they think about that versus peers?
Their main policy, as we said, is that dividend payout ratio target, 75% plus or minus 5%. They benchmark it against other big global consumer goods companies and feel it's competitive. Now, they did acknowledge that if you look purely at total shareholder return, including buybacks, maybe they lag some competitors.
Why that?
They emphasize finding a strategic balance. Yes, return cash to shareholders, but also invest heavily back into the business to drive sustainable, long-term profit growth. It's about balancing today's returns with tomorrow's growth engine.
And raising the dividend now fits that narrative.
Perfectly. It signals confidence they can achieve their targets, manage the FX situation, and still invest for the future. So for investors, the key things to watch going forward are, how does that Ploom AURA global rollout go? Do they keep capturing synergies from Vector? And how effectively do they navigate FX volatility and things like hyperinflation in certain markets? Those are the critical factors.
Okay, makes sense. Now for our favorite segment. This is not financial advice. But if we were brainstorming some, let's say, alpha-generating ideas based on this JT story, what might come to mind? I'll throw them out there. How about a pair trade? Long JT, short Philip Morris International, PM.
Ooh, okay. Interesting. What's the thinking?
Well, look at Ploom AURA. It's clearly making waves in Japan, looks set for international expansion. JT's HTS share is climbing, and their traditional cigarette business still has pricing power. PM's obviously the HTS leader with IQOS, but competition is heating up. What if AURA's success isn't just a flash in the pan? What if it genuinely starts stealing share, maybe more than the market expects?
So you're betting AURA's momentum gives JT more upside relative to PM, whose HTS growth might be seen as more mature or priced in already.
Exactly. If JT's international AURA rollout even partly mirrors Japan, that 2028 RRP profitability target looks way more achievable.
Yeah.
Maybe the market hasn't fully baked that potential JT upside versus PM's current dominance.
Okay, plausible. Bold, but plausible. Got another one.
Maybe something a bit more complex. How about a long-dated call spread on JT, financed by selling a deep out-of-the-money put option?
All right, unpack that option strategy.
Okay, so the call spread is basically a bet that JT's stock will rise, but within a certain range, capping potential upside, but lowering the cost. We're betting on that continued HTS outperformance and pricing power.
And financing it with a short put.
Yeah, selling a put option that's way below the current price.
Yeah.
You collect premium for that, which helps pay for the call spread. You're essentially saying, I don't think the stock is going to crash below this level.
So you're leveraging the current positive momentum, the raised guidance, the dividend floor, banking on AURA's global potential, and the streamlined business post-pharma sale.
Right. The short put assumes downside risk is limited or overestimated by the market, given the strong fundamentals we just discussed. It's a calculated bet on JT executing well.
Definitely fits the outrageous but plausible category. Leveraged bet on sustained success.
So just to recap the whole picture then, Japan Tobacco, a really strong second quarter. We saw double-digit AOP growth driven by pricing and that Vector acquisition.
And the huge news around Ploom AURA, a very successful launch that seems to be genuinely challenging competitors in the HTS space.
Absolutely. They raised their full-year guidance, bumped the dividend, signaling real confidence. The market clearly agreed, judging by the stock reaction. The strategy seems clear now. Drive that RRP growth hard, maintain strength in combustibles, and do it all with a sharper focus now that pharma is heading out the door.
And remember, everyone, this deep dive is purely for informational purposes. It is absolutely not financial advice. You always need to do your own research before making any investment decisions. But maybe the final thought to leave you with is this. As JT pushes forward with RRPs, is their success going to be more driven by consumers actively choosing potentially less harmful options, or by regulators pushing the industry that way? And is JT positioned to win either way? Definitely something to think about. Let us know your thoughts. What stood out to you from these results? Until next time, happy investing.